Welcome to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis and Judd Carlson. They are the co-founders of Asset Preservation Tax and Retirement Services. Stewart, how are you today?
I'm having an awesome day. How are you doing?
I'm having an awesome day as well. Always a pleasure to see you.
Same.
Judd, how are you today?
Wonderful. Great to be here. Nice to spend another week with you here.
Absolutely. Great to see you as well. I always love the energy that you both bring to the studio, and I'm so thankful that you take the time to do the shows because I realize you've both been extremely busy. We're obviously in the end of year planning phase. A lot of people are calling you with questions about taxes and what have you due to the shows. And Stewart, let me just ask you, what's life been like lately in the office?
Oh, we're swamped, but
Yeah.
you know, it's super important to to make sure we keep in good contact with the clients, not forget about the ones that have brought us to the party, right?
Yeah.
But we're seeing obviously a massive influx of people that are looking for help. I mean, we see tons of people that just have never been given the advice we talk about on the show, and it's been unbelievable.
Absolutely. Judd, what kind of questions are people coming in and asking you? Is there one that resonates more than another?
Yeah, I mean, obviously people are concerned about taxes. That's a big question, is where are taxes going to go? How's that going to affect me? How's that going to change if I'm able to retire in the next year or so? And they're very legitimate questions based on, campaign promises and things that have been out there.
Sure.
Who knows what's going to take place over the next 1 to 2 years on the tax side?
Absolutely. Stewart, what are your thoughts on that? Oh my goodness, there's a lot of speculation of things that are coming. I mean, what are your thoughts with the changes that could be coming tax-wise?
Well, I think it's really important to know that we know what we know, right? So we are in this really efficient, just period right now. We have one of the most efficient models available for tax planning, and we don't know if that's going to last or if it's gone, or until we start seeing some really solid plans as to what's going to change, if anything. That's why we say go with what we know, and we know that until at least the end of 2021. We have time to plan, and it's really important to make sure that you take a look at this efficient window that we're in, and you start saying, how can I benefit from this, right? A lot of people will look at like the president's tax returns and say, oh, he only paid $750 in federal tax. Well, he plans, right? That's why they had the NIIT tax that they basically call the Romney tax as well. Why? Because they plan. It's about making sure that you can pay your fair share of taxes, but the least possible. Have a planner.
Absolutely, which is always the goal. I mean, people obviously don't mind paying taxes. We have to pay taxes, but paying less is always a good thing. It's more that we can keep, correct?
Right, and where we see a ton of mistakes is when people start, when they see their loved ones pass and they receive these inheritances, or when they win the lottery, they end up squandering it because they aren't generally the ones that earned it, and they make huge tax mistakes. And what we can do for those people is really help them plan, really think through the implications. When you have this kind of sudden infusion of wealth that you've never been used to, you just want to make sure that you plan it well. And those are the people that we see that honestly have made huge mistakes.
Sure, absolutely.
Yeah.
Judd, in your opinion, how important is proper tax planning with the overall vision of a retirement plan?
Well, I mean, anybody who's watched the show a couple different times knows we talk a lot about taxes. Obviously, it's in our name. Asset Preservation, Tax, and Retirement. I believe that taxes are a cornerstone of all the retirement planning that we do. And again, a lot of that has to come from the fact that there are so many interworking parts that based on how much your RMD might be in retirement or your pension income, it can affect whether or not your Social Security is taxable.
Okay.
So that's where we try and come back through, and we talk Roth conversions, we talk about efficient planning, we talk about delaying Social Security, and not just as a strategy, just wait and it'll be bigger. We say, hey, wait, and maybe we can get some of the money out of those qualified plans or a lump sum pension early to save you bigger taxes later on in life, or hopefully the rest of your life.
Absolutely. Stewart, let's talk a little bit this morning about capital gains. Should people be concerned with capital gains at this time?
Absolutely. So when it comes to capital gains itself, we know, once again, what we know. We know that right now you're going to pay somewhere between 15 and 20% on most capital gain implications.
Okay.
A lot of the concern is that capital gains are going to be taxed in the future at ordinary income. Now, that's in the way that's different is, do you want to pay a 15% tax on something, or do you want to pay a 37% tax on something? So and the way that would work is, let's just say you have this stock, right? And we've seen these massive shifts in what a good stock and a bad stock is, right? Let's talk about oil stocks, for example. They have been the absolute, greatest, portfolio component that we've seen in a long time until recently, right? When market shifts and oil is no longer kind of the hot thing to own, and you see these shifts and you realize that, hey, as an example, this one stock we believe strongly is going to lose money, but you don't want to sell it because you don't want to pay a capital gain. You don't want to be a prisoner to that tax environment. You really want performance over everything else. And the reason a lot of people, were told by their parents never to sell this stock or never sell this house is because of something called step up in basis. Now, step up in basis basically means that when you're gone, when you die, you pass those assets to your heirs at the current market value, and all of those capital gains of the past are wiped out, right? And that is one of those things being proposed to being eliminated. Is it going to happen? Who knows? But that is one of the campaign promises, that Biden made, right?
Sure.
To get rid of capital gains and step up in basis. Well, so what do we anticipate is going to happen? Are we going to see a mass run on sale of property, on stocks, et cetera? I don't know.
Yeah.
But it's important to plan it out. We like dealing with certainties, and we're certain right now that we are in a very efficient time to really do this kind of planning.
Absolutely, absolutely.
Yeah, and
Judd?
if I could piggyback on that, I mean, that's kind of what he's saying, is that we don't know what the changes are going to be, but what we do know is that through the end of 2021, we know what the current capital gains tax rates are. And if you can keep your income under $79,000, you'd pay a zero capital gains rate. And then, as Stewart mentioned, the next would be 15% or 20%. But typically, that's going to be lower than what your ordinary income is. And then he mentioned that step up in basis where, yeah, if the parents pass away and they bought their house 35 years ago, the kids now get it at current value and don't owe taxes on that. Or a bigger piece, I was born and grew up in Iowa, and if you have a family farm and there's a mass appreciation that's taken place in that, and now the family has to pay a massive tax bill to go along with it, they're going to lose that family farm just to cover those taxes. So even though that may not be the implications, so what we're trying to tell everybody is not that you have to get out of all your highly appreciated stocks or everything because these are going away. We're saying just know what your plan is. If you need to do something this year and next year, or maybe just next year, but again, it doesn't hurt to have a plan, even if you don't end up having to use it.
That makes perfect sense. Thank you, Judd. Well, Stewart, I would like to have the opportunity to show the video this week because in case someone is just tuning in for the very first time, I want them to get to know you on a personal level. I have the pleasure of seeing you each week, but maybe someone is just meeting you for the very first time. And I'd like them to see what makes you so different and so special, being fiduciaries and truly caring about each client that comes in the door. So before we play the video, I'd love for you to tell the viewing audience what they can expect to receive by being one of your callers today.
Sure. So for the first 10 callers, if you call 833-652-7829, what we will do is offer you a complimentary portfolio review where we'll take a look at all your expenses. We'll see if there's anything in there, any deferred taxes in there that make sense to look at from a planning perspective. But there's no cost, no obligation. All we're looking to do is take a look at your portfolio, give you some advice, a second opinion, so to speak. And if you want help, just call 833-652-7829. We'd be glad to give you that second opinion.
Stewart, thank you so much. Judd, thank you so much. To the viewing audience at home, the phone lines are now open. That number to call is 833-652-7829. We'll be right back after this video introducing you to these two gentlemen. We know you're going to have some more questions about how to plan for retirement, so stay tuned. We'll have some answers for you. Don't go away.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. You know, I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
Welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. I love that video about you both, gentlemen, because obviously the viewing audience, they get to see what life is like in your office, and you have clients that are mixed into the video as well. You can tell that they're very happy to be there. It just really showcases you in a wonderful light. So thank you for allowing me to play that this week.
Thank you.
I appreciate that. So Stewart, I'm going to ask you a question. And if someone is in the viewing audience today and they're wondering what differentiates you, what makes you different, what makes you different in how you manage money, if you will?
Well, like we've talked about before, we're very conscientious when it comes to tax. Tax implications are important. But what I think is really different is the fact that we've taken the position that we want to have the best advisors in the world, the best money managers in the world overseeing our clients' portfolio. And when I say the best, obviously that's just our opinion, but we have access to some of the best money managers. We have the biggest money manager in the world overseeing our portfolios for some of them. And it's important. And the reason when we talked about that offer for the complimentary portfolio review, what we typically see is clients have a very passive approach. And what we mean by that is, they'll have a very static approach. And by static, what we're talking about is there will be a 60-40 bond split, like we're putting up the graphic on the screen now, where, most portfolios look like one of these, where it's 60-40 bonds, 70-30, zero, I guess. So it's, and what happens is that quarterly, when you look at these, they just rebalance. The computer program rebalances and keeps you in these proportions. And that's a very classic asset allocation model. And the reason a lot of advisors do that is it doesn't take a lot of work, right? You set the model, the computer rebalances, and it does what it does. The way that we do it is a little bit different because we use what we call a tactical approach. And the tactical approach, here's an example on the screen here. There's a graphic that basically one of our asset managers takes a very tactical approach, and they have identified 6 distinct stages in the economic cycle. And just think about the logic of this here, right? If you see in this graphic where you see the curve going down, then back up, and then back down. If the market is declining, right? If we're in recession, you've got to think that there are better investments in that specific segment than there are in others. Meaning, it's not the same investments that do well in a declining market that do well in a rising market. And the problem with a static approach is that people just hold, and the broker will say, "Hey, just hang in there; it'll come back. Just hang in there." Well, we try not to take that approach with most of our clients, where we say, listen, don't take the unnecessary losses, right? And so our asset managers take an approach that they believe that they've identified these segments of the economic cycle, and they have an algorithm that determines when we're in those. And so just to kind of oversimplify what I'm talking about, think of it like this. When the market looks good, they hit the gas. When the market looks bad, they hit the brakes. And it's just, it's just saying, look, we're not willing to take the losses. We're not trying to beat the market on the way up with these portfolios. We're trying not to lose on the way down. Now, a lot of people will say, well, why don't I just buy an S&P 500 index fund? The reality is they do really well when the market's going up for a long period of time. But when we see this kind of increased volatility that we've seen over the last couple of years, you're taking a lot of risk for the same amount of return in some cases, and it just may not be worth it. You may not have the stomach to be able to see a 52% loss like we saw in 2008, or a 32% loss like we recently saw in the COVID drop.
Sure.
So the reason we use that is that it's, in our opinion, it creates a shock absorber for the system that basically insulates clients from some of the volatility that they would otherwise be feeling.
Okay, thank you.
Well, and a good example of that too, Stewart, would be going back to the passive or the buy and hold strategy that a lot of people use over time is when COVID took place. Now, if you look at the S&P 500 and the big indexes, we had the V-shaped recovery and they bounced back. But if you were in a buy and hold strategy and you owned cruise lines and airlines and hotel and travel industries, you have not seen that same recovery. So kind of going back to what Stewart was talking about in a very simplified term is something like COVID comes along and they get out of the things that are lagging or doing poorly and they get into the online communications or some of the technology stocks where people can work from home, where people can do school from home. And that's just, again, a very kind of simple example when you're thinking of that, tactical versus passive buy and hold.
Okay. I want to ask you a question, Judd. What kind of risks are people taking without even realizing, if you will?
Well, one of the biggest questions that we get, or the times where the markets have done very poorly and we've had a lot of new clients come to us, is they'll say, well, I didn't know that I had that much risk in my portfolio. I don't know how I lost that much money. So from that standpoint, we want to go in and be able to really see, where they're at, what they're doing, and why they lost that. Because the catch is when the markets are doing well and their account's going up, maybe going up more than they should expect it to if they're as conservative as they believe they are, they're not asking those questions then.
Sure.
But of course, when it drops, now they're upset. So the risks that they're taking there, again, I would say that some of that comes back to just the back and forth communication that you should be having with your advisor, so you understand your portfolio. You understand that risk. As Stewart mentioned, our portfolios aren't just terms like conservative, moderate, balanced. We try and give our clients the idea of, okay, we're going to call it a target drawdown 5, a target drawdown 7, a target drawdown 10, meaning how much are you willing to lose from the peak of your investment if we do really well for a few months to the trough if we get a big pullback. And if that's less than 10%, then you're going to be in a 5 or a 7 portfolio. And then at the same time, your client should be able to understand, just like the example Stewart gave, foot on the gas, foot on the brake.
Yeah.
If someone asks you in an elevator to let them know what your portfolio is set up as and how your advisor manages it, you should be able to give a pretty simple explanation of that, where I think a lot of advisors just say, hey, you're paying me to do this, leave me alone. And, we're here, some people want to be led, some people want us to be the chauffeur and just, take them around through retirement. But, a lot of people really want to learn and understand what they have, why they have it, and know that they're going to be okay.
Absolutely. Well, Judd, this is the perfect time for us to open up the phone lines to the viewing audience at home. Would you like to tell them what they can expect to receive today?
I would love to.
Okay.
If you're watching today for the first time, or if you've been watching us for a couple of weeks, we really want to invite you again to call 833-652-7829. Set up a time to come in, sit down with us. Stewart and I, we're the two owners of the company, and we're happy to do a complimentary portfolio review for you. And again, that portfolio review is going to be an analysis of your investments. It can be looking at your taxes. It can be looking at the cash flow of where you are right now and where you're going to be in retirement. Because in the end, we're basically interviewing for a job. You know, we want to be your future financial advisor. And if there's a great fit and you need our services, wonderful, we can move on from there. If it's something where you come in and you're in great shape, we're going to let you know that. And we part, you know, again, no bill in the mail, there's no catch. So again, 833-652-7829. Give us a call and we look forward to sitting down with you.
Judd, thank you so much. Stewart, thank you so much. To the viewing audience at home, the phone lines are once again now open. That number to call is 833-652-7829. We know you have a lot of questions about how to plan for your perfect retirement. These gentlemen have the answers for you. Again, all you have to do is pick up the phone and call 833-652-7829. We'll be right back after this very short commercial break.
This is the story of how you get from here to there. Right now you're here. But in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
Welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis and Judd Carlson. They are the co-founders of Asset Preservation Tax and Retirement Services. Wonderful show we're having today, gentlemen. And again, I love seeing the phone lines light up, but I do want to ask you, because I know you've been growing. Let's talk about the office locations. Where are you now, Stewart?
Well, our corporate headquarters, if I can actually say headquarters, our corporate headquarters, I'm not going to keep saying that word, it's a tongue twister today. Our main office, how about that, is in Sun City Surprise area. It's, you know, we've got a big building, and the one thing that people say is they can't believe how big it is on the inside compared to what it looks like on the outside. But, you know, that's where our main office is, where we handle tons of clients from Portobello, Westbrook Village, Sun City Grand, Surprise, Peoria, etc. And then we also have another office out in Scottsdale, right off the 101 in Shea. That's where the Scottsdale office is. We actually have another one that's going to open in January or February out in Tempe, which is you know, awesome. We're looking forward to that one as well, to service all of our clients in Chandler and Gilbert and Mesa. You know, most of those clients come to our Scottsdale office now, but are happy that we'll be a lot closer to them in the very near future.
Absolutely. Judd, let me ask you a question. What is the experience like culturally when someone comes into the office? What can they expect to feel when they walk through the doors?
Well, from whether you're a brand new client coming in or you're a longtime client, we want you to walk in and have a first-class experience.
Okay.
You come in, you're greeted by one of our receptionists as you come in. They take you back to our client lounge where you can have a beverage, enjoy yourself, relax. We usually have obviously some questionnaires and things we want to get from people ahead of time, but that's your time. So when you're there, we want to give you that hour and a half and go through that information with you. And I can't stress it enough that we want to work with the people that want our help.
Sure.
So you're never going to get a hard push from us. If there's more information, I always tell people, don't be shy. Don't be afraid to ask more. If you need to come back a second time to be able to, you know, get all those questions answered, make sure we run the analysis for you. Again, we're happy to do that. And we want people to walk out that door, and we've had some of our best clients came from referrals of someone that there wasn't anything we could do for. But they so appreciated that experience. So I do want to say that we're getting a lot of great response from brand new viewers that are coming in, but we would not have grown like we have and been around for 23, coming up on 24 years if it wasn't for the great clients that we have. I mean, you can have a wonderful restaurant, the best restaurant in town, but if you don't have anybody knowing about it, if you don't have those big proponents of your business, so thank you to all of those clients we have out there. We've even got some, 3 generations of families that are doing business with us. So.
That is fantastic. I love hearing that. Stewart, let me ask you, if someone in the viewing audience already has a retirement plan in place, or they think they have a retirement plan in place, how important is it to have a second opinion?
Well, I think it's the one thing that most people avoid. They believe, hey, my advisor's great, everything's fine. But then they, something in the back of their head says, we've got to get it checked out. It's really important to make sure you have a second opinion on your portfolio, to make sure that a fiduciary looks at the portfolio, make sure that, we see a lot of, kind of old aspects of old style portfolios with loaded funds in there. You want to understand every detail you can about your portfolio. So, it doesn't hurt anything. The reality, though, is most people never get off the couch and make the call. Most people just settle with what they have, even if they know they need help. And so with the offers that we've made today to help take a complimentary look, that offer is very clear. You're going to sit with one of the two partners of the firm, not underling at the company. You're going to sit with one of the two of us, and we're going to take a look, and we're going to give you our real opinion. And quite honestly, every once in a while, we see some stuff that's really, really good, and we let them know. And, sometimes there's no change necessary. It's just about giving people the reassurance that they'll be fine. And that's what we like to do.
Absolutely, absolutely.
Well, and if I can share on his point too,
Please.
There's someone out there might be listening saying, oh, well, you guys have all this time and it's only the two of you. The reality is we don't believe in hiring junior advisors and pushing our clients off that way. We expand our administrative staff so that they can manage our calls, manage our schedules, get us the ability to sit down. We always block off time each week for new clients, new callers that come from the show, but we want to make sure that we've got that time to spend with our clients. So I don't want anybody out there to misunderstand the fact that you're sitting with the two owners because, there's only 7 days in a week, but we'll fill all 7 of them if we have to.
Okay, absolutely. And then, Stewart, let me ask you, how important is it to revisit a plan once a plan is in place? Do you revisit it yearly, quarterly? What is your thought on that?
I think a deep dive we have to look at once a year, every other year. But we want to have those quarterly reviews, updates, because things change, and we want to know what those changes are, right?
Yeah, absolutely.
If people will, need to buy a car or an air conditioner or inherited money or whatever, we want to be involved every step of the way.
Absolutely. That makes you guys so special for sure. Stewart, thank you so much. Judd, thank you so much. To the viewers at home, that phone number on your screen is the number to call. It's 833-652-7829. We know you have a lot of questions about how to plan your perfect retirement, or you may just want a second opinion about what you currently have in place. Don't miss the opportunity to meet with these gentlemen. Again, thank you so much for watching this week. Be safe, be happy, be blessed. We'll see you here again next week.